I want to match that. I think that. Hi, everybody.
Okay, real.
We are live now, straight from New Life Realty Group in Montgomery County. So we had some technical issues with Instagram, so we did not was not able to create the broadcast on all three platforms as planned, but we were able to go ahead and still log in on our Instagram, but it's separate. So for those who are tuning in on Instagram, sorry we didn't get a chance to set it up the way we had planned, but you guys can still see us on Instagram. Well, we're not on we're using the green screen, so it's a little different. And I'm here to say that we're excited about the new things that are taking place in the community. We're looking forward to helping you guys to see your goals. And I want to talk about a few important facts about homeownership, selling, buying, investing, and your credit, how important these things are, and how it's going to impact you, your family, and the community as we grow in our homeownership. So I have my partner here. Introduce yourself.
All right, my name is Quentin Burks. I'm a home loan consultant with Valley Bank. My primary office is in Auburn, Alabama on East Glen, but I do a lot of work here in the Montgomery area with Miss Tisha Perry and her New Life Realty group. I'm really excited to be working with them and hopefully some of you as well. So I also have offices in Birmingham. I can service that area as well in Jefferson County. So that's me. Home loan consultant here in East Alabama, looking to help you and your family secure home ownership.
Okay. Well, let's talk about some of the products that you guys offer at your bank.
Okay. My favorite one, I like to start with our first time home buyer program. It's one of the absolute best on the market. And if you ask me, really low down payment. So it's not 100%, but it will allow people to secure financing with just 3% down. There is no PMI required for that program. So you can secure that with no private mortgage insurance. And then of course, the the private mortgage insurance, the low down payment, and then the interest rate, of course, is 4.25 right now, so 4.25% for that program. So really good and helpful for first time homeowners, first time home buyers. Of course, standard products. We're going to have your VA, your conventional, and then of course the FHA loans. USDA is also an option that's available, but we don't see a lot of that, not a lot of
There's not a lot of areas that have USDA. Um, Particularly in Alabama, there's still some USDA territory, but it's not that many. And it really depends on where you're trying to be as far as your school zoning, where you're trying to be as far as being able to be accessible to things. And then people are not selling a lot in the rural. Once they buy their home or build a home out there, you don't find those people moving as often because they're pretty much settled or they have inherited property and they're trying to keep it. So you don't find a lot of USDA territory properties actually available. And that's what we run into because the programs are out there and people are still using the USDA program, but it's not a widely used program at this time because of availability of housing.
Exactly.
There are down payment assistance program. It is going to be based on territory. Not all locations have down payment assistance, meaning that they're down payment assistance, but it's going to be based on income and credit and location because there's some down payment programs based on location as far as your state, the county that you're in, the city, and funding is available based on the bank and what they may offer their own products. And then there's some state products. So it really all boils down to your income because everybody don't qualify for down payment assistance. I think there's a lot of confusion with that because oftentimes people think that it's down payment assistance that's going to be for all and everybody. Now, keep in mind, if you're making over a certain amount of income, I think generally run about 55 or 60,000
in this area. Yeah, in Montgomery County, is
right. You pretty much that's going to be your max to qualify for some of those programs, unless you are going USDA. Most of the people that I know who do get USDA, who qualifies for a little bit more, and they make more, is because of the location. Like Birmingham still has some USDA territory. There's still some USDA territory in the Otaga County area and Wetumpka area, but it's not a whole lot because the availability of housing is limited. So when people start asking me, oh, does this apply to all individuals? Can we get down payment assistance? Even if you're getting down payment assistance, you still need to have some money saved. You know what I'm saying? People get confused about what down payment assistance is. You still need money for different things. when it comes down to buying a home, I like to let people know whether a seller's paying closing costs or not, you need money for earnest money to secure the property. That can be anywhere from 500 to a few thousand, depending on the cost of the home that you're buying. Not everybody's accepting $500 or $1,000 earnest money. You got people who are, some people putting 3 to 5 grand on for earnest money, especially when you're going into the 300,000 and up. You're not going to give them no $1,000 to hold a home. Most cases, you're giving them, more than that. So you need to have money for that. You got to have money for inspection. You got to have money for an appraisal. You need to have money for a rainy day period. That's a whole nother topic of discussion. We need to get in the mindset of when we get our little income tax check, when we get money, we want to put something to a side to have for a rainy day. Because keep in mind, we do not know what's going to happen with the economy. We do not know what's going to happen with people's jobs. And even if you're a business owner, your business may go up and down. You need to have money put to a side. I mean, a lot of people can't save thousands of dollars in a month, but over time, you add a little bit to it, it adds up. So you never know when you'll need that money. And for a first-time home buyer, there are programs where you can get no money down. I've sold homes to people that they didn't have much at all. They were scraping up change for money, but they closed. Now, keep in mind, in this market, when you're up against other people who are looking to buy, who have options, it's going to be limited when you don't really have any money to negotiate. Even though the economy is shifting and we are in recession, there's still a competitive market, depending on the price range that you're in. Right. The lower it is, the harder it is to get some secured. I mean, because it's not that many lower end properties, everything is going up. Right. So if you were in the 150 to 250 range, you're fighting against everybody else and the investors who are snatching these properties up with cash, let alone people from up north coming down south buying these properties cash. Okay. So we're talking about people who live in other states who got money from 401k, retirement, or investments, or selling their home or pulling out equity in their home to buy down south. And that's causing the prices to drive up. Oftentimes people ask, okay, so now with the recession or with the interest rate, is that going to cause a change in the price of homes? Keep in mind, even if it does change, the cost of home is not going to drop tremendously where you're going to get 30 or 40 or $50,000 off a house that was normally priced at 200. You're not just going back to 150. That's not going to happen. I mean, I've been buying properties since I was 22 years old. My first property that I bought was $120,000 brand new home in Lithonia, Georgia. When I bought my brand new home in Lithonia, Georgia at 22 years old, I was living in an apartment paying $750 for rent. And I got a notice on my door saying you can have a home for what you're paying for rent. And actually, I ended up buying a home and I was paying like $800 and some dollars for my mortgage at that time at 120 because of the interest rate. 1 year later, I turned around and bought another brand new home and I was paying for about 150 and I was paying about almost 1,200. So the interest rate back then was a totally different from what it is today. So a lot of times people get thinking that the interest rate is normal for 3%. 3% was not the norm. Right. It wasn't a norm to get a 2 or 3% interest rate. Right. Even 20 years ago and previously, everybody knew that the interest rate was going to be a lot more. She said she can't hear me. Let's see what's going on. Oh, let's see. I got a notification that said they can. Don't tell me we've been talking and nobody can hear me all this time. That would not be a good thing. Nancy, can you hear me now? I don't think I have anything on mute. Like, really? Hold on. Sometimes it can be someone's phone, but let's make sure because we don't want to be talking. Mute mic. No, it's not muted on my end. Okay. So, Tatiana, are you able to hear us? Someone says that it was she said now she can.
Now one person said they can.
Okay, so it could have been something on her end. Okay, wait a minute, because we've been talking for a minute and someone said they can't hear us. So we definitely did not want to keep talking and the whole 30 minutes. Listen, I'm not one of those people like to waste time. Time is valuable, okay? Right. Your time is valuable also. A lot of these people at work, we're going to have this posted back online. But it was funny because she said she couldn't hear us. So I panicked, like, don't tell me we've been talking all this time.
I thought the same thing when you said that. I was like, oh my God.
We already had some issues because I got all this equipment. And mind you, when you change devices, you got to reset everything up with these new Apple products. So it is so
Okay.
crazy.
So Devin
Which
heard the whole conversation.
okay, great, David. Because I got a little worried. I said, "Oh
Right.
my God, this is the first time we're doing this seminar live, and the last thing we want is issues with technical, right?"
Right.
So we already had enough issues setting up because when you're doing new equipment with MacBook Pros, all this new technology, you have to reinstall software. You have to reconnect computer, the cameras. Mind you, I got a whole production studio, but a lot of this stuff I was not able to use because I had to reinstall software on the new MacBook Pro. And I tell you, it is a task. So we are streaming live directly from the computer instead of me using all the equipment, which it wasn't quite set up the way I wanted it. So I hope it's showing good on your end. Thank you for tuning in. For those who are being positive, this was something that we've been planning for the last week. It's not something that was over a month's time. Um, yeah, it's not showing green screen on Instagram because we were not able to get Instagram to stream live directly from the computer. And that's something you can do. You have to set everything up separately. You have to set it up through a link. And anyway, we just want to make sure we did go live on both platforms. So yes, Instagram is showing the green screen. So Facebook Live, you can see that we changed the background image. This is not nothing new. By now, most people are familiar with background images changes through Zoom and all other types of sources. So I got a full production studio set up. Trust me, we're going to have a whole lot going on in the future. But we wanted to commit to our goal was the homeownership seminar. Back to the key points. 20 years ago, when I bought my first property, I was 22 years old. And like I said, the housing market was different at that particular time for the cost of living. The cost of living and the cost of homes were different, but not much of a difference. The interest rates were higher. So, like I said, after I bought my second property at 150, I was paying almost $200,000 for that home. I'm not 200,000, $1,200. And I've sold homes to customers recently in the last 12 months who bought a home at 200,000, who was paying like right at 12. So that shows you that's a huge difference. 150 paying almost 1,200 a month. 200,000 at 1,200. So people got used to the lower rates, but that wasn't always the case. So when people are saying, "Oh, I'm going to wait till the rates drop, I'm going to wait till the interest rate go back down," we might not see the threes for a while, baby, because that wasn't a normal interest rate to get for a mortgage. So a lot of people got confused thinking that was a normal way that 2% is what we're supposed to get. Exactly. It'd be nice because I'd be happy to go ahead and get some more investment properties at the lower rate. But investors are still moving, baby. So a lot of people's like, okay, so what does this mean for investors? Most of my transactions comes from investors. Like when the homeowners are being picky about what's going on with the market, my investors are not slowing down because they're looking at from an income standpoint and a profit. You can always refinance later or pay it off. But when you're dealing with investments, it's not just about the interest rate because it does matter because of your mortgage payment in the area that you're going to be investing in. You don't want to be buying a home for $100K and you're paying $100,000 and you're paying $1,000 a month for a mortgage with taxes and insurance. It doesn't make sense, right? As an investment standpoint, because the rent income for a $100,000 home is going to be less than $1,000 9 times out of 10. Every now and then you may be able to get 900, 950 or 1,000. And when the market was getting really tight with housing, people increased the rent. So I'm sure everybody knows the rent has been increased. Most people are paying a pretty penny, especially in Atlanta. I'm a broker who serves multiple states. And when I tell you Atlanta is going to be the little New York soon because everybody I know is paying high rents. Even my daughter was going to be moving back to Georgia, but the cost of finding a nice place to rent was so expensive that it was beneficial for her to get an apartment downtown Montgomery. And that way she can go back and forth. Now she's eventually going to move, but to be realistic, when you're by yourself and you don't have any responsibility, why go and pay $1,500 or $2,000 for a place to live when you can get something for less and still be able to travel? So it only makes sense to think wise about what you're trying to do. Right. Because whether you're renting now and you're saying you're going to wait, you're going to just keep renting because it's always going to be something. Either the cost of the property is going to be going up or the interest rate. So right now, the rates are not too bad. 4% is not that bad for some people. No. I do have some investors who are getting 5. I was about to buy a commercial building, and I think that was going to still give me probably around about a 5.5, 6, and that wasn't even bad. I complained because my scores are 800s. So I was thinking, okay, I waited all this time to get my scores really high. I got the money, I got the income, and I got the credit, and I'm thinking I'm about to get this great rate because of my status. Well, it's not about that. It's about it's various factors that goes in. when it's time to buy investments. It's not the same as just a regular homeowner where you're going to be occupying the property. It also determines based on the value of that building that you're going to buy or that income driven property that the banks look at that. What's going on in the market, what kind of monies you can be making from those individual properties. And there's other factors in place. So it's a little bit tricky when you buy commercial property and when you're buying investments, the type of loan you're going to get. So the most important thing is what is the cap rate? What are you looking at as far as the income that you're going to be generating from those properties? Not just, oh, what kind of interest rate I have. Most importantly, keeping your credit up, because if your credit's good, you'll be able to refinance those properties later and get a better rate. The key is get in there and get your investment. Home ownership is an investment. Whether you're buying it to rent out or lease to someone else, or whether you're buying it to stay in. And I want him to give his testimony about him. He just recently bought his first brand new home in a nice community in Auburn.
Right. So, and I was kind of the same way you were, Tisha. Like, I waited a long time to purchase my house. I could have bought years ago. Waited a long time. I wanted to have a really high credit score, have a really nice down payment, income, and everything to be so solid. And when the loan officer came to me with the rates, it kind of surprised me at 5.25%.
Okay.
And so I was like, wait a minute, like what's the best you offer? And he showed me the breakdown. He was like, this is where rates are for top credit scores right now. So I was shaking a little bit because this is my first purchase, but I do loans all the time. So I had quoted rates, a little lower than that just a few weeks prior. So people at 4.5, 4.875 and things like that. And I was like, so this is where rates really are. He was like, rates have gone up. He's like, they've gone up since this morning. So we were talking in the afternoon. So we were seeing at that time, what was it, 3 months ago, we saw a big spike in rates, and that's when I bought. That just happened to be when we found the house that we were looking for. But I want to encourage people now that seeing that 4.5 or that 4.875, even 5% rate right now, it isn't a bad interest rate. Mm-mm. We're just jaded by what we saw in 2020 when rates were historically low, unbelievably low. I was telling people like, this isn't something you'll ever see again. So I was actually having a conversation with another gentleman. He's a mortgage officer as well. He was telling me like, go ahead and buy now because the chances of rates going down in the future are higher. So if you're waiting for them to drop, you could be waiting to no end, really. They will come down, but if you wait to purchase that long, you're going to miss out on some probably really good property that's available. So
it all boils down to mindset.
Exactly.
It boils down to mindset because this is where I look at it. If you don't own and you're paying $1,000 for rent, $1,200, $2,000 for rent, just show somebody, just to prove something to somebody. And then some people, you're not even living in a nice condition and you're paying that high.
Exactly.
You can get a nice property here for $2,000, $1,200, $1,500. You can be living really nice. But up north, that's the norm. $2,000 for rent for a little small apartment.
Very much.
You don't even get, it ain't even luxury. Here, you can get you a luxury life. You can live a luxury lifestyle for $2,000.
Right.
Okay. And so we know that if you're paying $500 for rent, you're not probably going to buy a home paying that for something quality to live in, unless you're going in an area that's low income. If you're buying like an investment property that's like less than $100K, and even that with tax and insurance, you're still probably going to end up roughly around about $600-700. So, you have to think realistic. You're going to either keep paying rent to somebody, or you're going to eventually own. You have to determine what's going to be important to you.
Right.
You want to keep paying rent, or you want to own. I deal with a lot of investors. The investors are not letting up. They're looking for options. And the sad part is I've sold a few cute little homes recently that I felt like, oh, this would have been nice for a first-time home buyer. But these people are thinking they're going to get a luxury home, and you barely can qualify for a loaf of bread. What I'm saying is you got to be realistic about what you can get, baby. Everybody can't qualify for 2s and 3s. So if you can't get something nice so you own, that's something you can deed and will to your family. It's something that you can buy in an investment. This is another thing I was thinking about. When I bought 14 homes in my 20s, my advice to people now, if I could do it all over again, those who don't have any kids or full responsibility, who are looking to buy investments, you buy your home, you can get your first time home FHA 3.5% down, probably end up with a down payment assistance, may not even have to come up much at all. Then a year later, you go turn around, buy another property. Okay, you can buy another property conventional, and as a primary residence, you still wouldn't have to put 20%. Some may do 5, some may be doing 10. It really depends. I'm not a banker, but I do know.
I'm working on one right now with a gentleman. He purchased his first home, multifamily. He has tenants that live with him. He occupies it as his primary residence, has students living with him because he lives close to campus. And now, a year later, he's purchasing his own single family home now, and that house is cash flowing. So he's not paying mortgage there. So young guy, first home. Now he's about to have his second house at the end of next month.
See what I'm saying? See, you guys, y'all young people, who not stuck on staying. Most people who buying a house now, it's not going to stay in a house for 30 years. Let's be realistic. So when people talk about 30 years, first of all, you ain't going to be there 30 years. The average person is not going to stay there 30 years. Our parents might have done that. Your grandparents might have done that. But the average person is not going to stay somewhere 30 years. Okay? Because even when you get up in age, you may say, well, it's time to downgrade. I got all this. We got almost 500 square feet in our house. The chance of me staying there until I get old is probably going to be slim. But because that's where we are now, I'm going to stay put. The cost of living is up. It makes sense for us to stay in nice. It's probably more than I need. You end up buying stuff, filling it up, and there ain't nobody there but us because we're empty nesters. So once you become empty nesters and you have all these things, your values change. Your goals change. You might do something with the grandkids, but outside of that, your house got all this stuff and no one's there. Then it's a lot to maintain. You might downgrade or you might decide to rent out some space. My mindset is about making money. If I can rent out some space, I'm going to do that. Either way, buying a property is a part of building wealth. When you're buying a property, it's an investment. So whatever you choose to do with that is going to be the determining factor what direction to go. But you always need to understand that ownership is a part of building wealth. Okay? So make sure y'all liking and sharing this stuff. Don't be acting all stiff-necked. Y'all see me on Facebook. This is a business and it's about building relationships. I'm providing knowledge for the community. So when you're looking at it, don't be afraid to share. Don't be afraid to click like and share. This is a business. I'm going to be doing more. And this is going to get bigger than what you think. So for those who are tuning in, I understand. I've already realized your friends and your family is not your audience. But if you are tuning in as a friend or a family member, I'm very grateful for you. What I do on Facebook and what we do as business owners is to promote. And we don't want to necessarily bombard you with all of this stuff, but people are on these personal page and business pages need to know this stuff. Right. And people who have children who are already homeownership, who already own a home, can share this information. So this is not for those who think they know it all, who don't need to know. And if you are supporting it, we greatly appreciate it. I am going to be getting my YouTube channel set up, and it's going to be big. So those who are following me, go ahead and hit like my YouTube because it's going to be more stuff going on there. So I want you to understand owning home is part of building wealth. This has nothing to do with me trying to make a sale or trying to worry about whether you're going to let me be your realtor. I'm good either way. But those who want to work with me, great. Same thing for him. He has loan products and services available, and he got the knowledge to be able to help you get to where you need to be. But you need to understand that buying a property is part of building wealth. Don't get caught up in what everybody's thinking that the rate's going to drop back down to 3s. You might be waiting around and still paying rent. Before you know your lease is up. Now you're renewing the lease again.
Exactly. I got a couple people have that run into that.
Yeah, you're talking about you're going to wait till lease go up. Now your lease is up.
Yeah, and the rates actually are higher than what they were when we were, because around when they went from 3 to 4, people were like, I'm going to wait a little bit. Maybe they'll come back down. Now they went from 4 to 5. And so they have to resign.
Here's the big catch. I was talking to somebody who called me a referral, and they said, we was thinking about just going and find a place for rent. We wanted to pay about $2,000 a month for rent so that we can just, go and get some in Prattville, because Prattville is not cheap. I live in Prattville. We don't live in a subdivision. We live on land. But so the subdivisions are not cheap. When you want to get a newer home or even the older subdivisions, you're paying a lot more for it because it's a hot area that people want to live in, right? So when you're thinking about that, someone told me they really pay $2,000 a month for rents, right? Because they don't know what they want to do. And I said, what's your credit looking like? And they said, well, we got 700. So I said, what are you going to rent for? Because we don't know. I said, baby, it's an investment. You move somewhere, you pay somebody $20,000 a year for rent. Think about it. Add the math up. Do the math. $2,000 for rent.
That's a
month.
That's a lot of money.
You're paying $20,000 $1,000 a year. Why are you going to give somebody that money for rent? Get your house as an investment. And even if you're not going to live there, it's an investment. You can rent it, lease it, and sell it,
whatever you choose to do.
Or you can keep it as a second home. And here's what I've been thinking about. Airbnb is big, but not all areas allow for that. So
Right.
before you buy a property thinking you finna do Airbnb,
Do your
you need to
research.
know the terms and conditions of that community, because not all communities allowing for you to do that
Short-term rentals.
short-term rentals
Right.
without you being occupied in the property. And a lot of people lost money last year from Georgia because of the change within the last 12 months. Actually, they changed the laws. You have to, you can only have two, I think, in Georgia now. You have to occupy one of them.
Right.
And then if you occupy, it's a lot involved. So these are things that you need to understand, because people thinking they're going to be able to do that. And it's not always going to be the case.
Right.
Okay. When you're doing Airbnb, but the good thing about it, there's short-term stays, there's Airbnb. And if you're someone who have income issues and trying to figure out a way to make some more money, voila, own your property, set up a little room. I'm trying to tell you, make the money. There's ways you can get a little income to do things you want to do in life. People need to stop thinking they need to stay on a job 20 years making $12 an hour, $15 an hour, when you got high school students coming out making that.
That's true.
Sorry, Target even was paying $13 an hour.
Yeah, they increased.
Walmart, even McDonald's was paying 12. And these people been staying on these jobs, and then they can't even qualify for nothing because of the income, and they've been committed to those jobs. So not to knock someone, having an income and job stability is very important. Here's the thing. I remember when I was finishing my degree, and I was tired of working from home. I wasn't really doing a whole lot of real estate at the time because I was in school finishing my undergrad, getting into my master's program. And I decided I wanted to do something, just get out the house, because I was working from home, doing customer service, all these little jobs, and keep my little income coming in. I always kept money coming in, honey. I ain't one of those people sit around, even though I have a good husband who's a provider. I was just wanting to make sure I keep my little stuff taken care of. So I took on a job at, not working for Walmart, but I did a demo. And they was only paying me like $10 an hour. Mind you, I made $10 an hour right out of high school, but it wasn't about the money. That was just something to do at that time for what it was for. It wasn't for me. It wasn't about the money for me at that particular time in my life. This was years ago, by the way. But a lot of people was like, what are you working here for? You don't have to do this. You can make. It wasn't about that. What I did was for a purpose. And only other person to understand that was for me. So I don't never judge someone who works somewhere and they might not be making that much. They might be very happy with where they are. But this is the dilemma you are in. If you've been there for many years and you have not been able to reach a goal of home ownership or owning anything, and barely can afford a car loan, you have to think about long term. Where is this going to lead me with the cost of living increasing? The cost of living is not going down. So if you're going to stay somewhere and you're going to be at that job and you're not able to qualify for anything, how is it benefiting you? Take those skills and that you've gained while you're there and use that for something else.
Absolutely.
So, that's just my opinion. And there's other opportunities out there to make money in other areas. So don't get caught up that you got to be somewhere to be able to have some. All you need is 2 years income, 2 years proof of income to be able to qualify for a mortgage. And so what is some of the things you feel that people need to understand when it comes down to qualifying for a mortgage based on your loan experience?
Some of the things we touched on already. We know how important credit is. Those are kind of some of the simple things. Income is a huge one. A lot of times the way your money comes in. So some people work a job that has a salary. They may work a lot of overtime, or they may get bonuses or things like that. I always want to tell people that has to be shown, and we'll average that over about 2 years, like you said. So if you just started, if I had someone during the pandemic, I think it was actually in 2021, they worked a lot of overtime because, of course, how everything had been, shut down for so long. So they had to do a lot of catching up. Well, for just a short period of time, they worked a lot of overtime. So her income, her pay stub looked great, like almost triple her regular income. Well, the W-2 income from the previous 2 years didn't look like that. So it didn't match up. So she thought she could qualify for almost $200,000 more than what she actually could. But if you just look at the pay stub, the money's there. But the W-2 from the last 2 years W-2 that I'm going to have to look at didn't show that. It showed her base salary. So there was an issue. So she thought she was going to get a really big house and do some different things when it was something a lot smaller. So keep in mind what your income is. And remember, we're going to use the previous 2 years. So right now I take your 2020 and your 2021 W-2 and we'd see what that income is. Now, if you do work a W-2 job, and you did get a pay increase, I can take that, but it can't be just overtime or bonuses. It has to be your new hourly rate wage. So just something to keep in mind for people that are trying to qualify, and how income plays into that.
Here's the thing. He asked a question. Will Henry says,
Mhm.
can you leverage renting history to actually purchase a home? For an example, if you're a long-term renter, can you leverage? No, ma'am. No, sir. First off, if you're a long-term renter, then you no good, but you've just been paying rent and have a good history.
Mhm.
Now, what I will say, there are lease to own purchase programs out there. There are owner finance programs out there, but you're still renting until you own it. It's not in your name until you own it, right?
Right.
So my thing is, if you want to have your rent reported, there are ways you can have your rent reported on your credits
Right.
to help benefit that way, because your rent history is not on your credit.
It's not.
So if you want that, you can communicate with your landlord, and there's programs online that you can sign up for to both of y'all agree that your rent, when you pay your rent, is reported on your credit.
Mhm.
And make sure it's reported on at least 2 or 3 credit bureaus, because one credit bureau is not going to do you no good for the others.
And
so
I want to chime in just a second. So our first time home buyer program at Valley, for people that have no credit whatsoever, let's say you never borrowed anything ever, you've never established any credit. Well, our first time home buyer program that I spoke about, that's 3% down, no PMI, and a 4.25% interest rate today. If you don't have any credit at all, let's say this person's been written for years, if they can show me proof of that rental history, and even something as simple as a cell phone bill they pay on time for 12 months, I can take those 2 items in lieu of no established credit. Now, if you have bad credit, or have to go through some credit repair, it wouldn't apply to you. But for those people that are out there that have never established any credit whatsoever, I've actually been successful closing loans for people that have no credit whatsoever, and we've used something as simple as a Netflix payment they've had for 2 years and things like that.
So that's there's ways to have. I usually tell my buyers, get yourself set up, get some things in your name, because you need that. There's trade lines available. There's also ways you can have stuff reported on your credit. Experian Boost allows for the same thing, but it's only helping you on Experian. It doesn't help the other accounts. Right. But Experian is one of the least reported credit bureaus. So some things that may be on Equifax and TransUnion may not be on Experian, vice versa. Something may be on Experian, then it may not be reporting on the other reports. So typically what we usually do is a credit review and analysis to determine what your needs are. We do a credit review and analysis to see, before I even send you to a lender, me and my team, we always take a look at your stuff to find out what your situation is, what we can do to help. If you need those things, whatever we need to get you where you need to be. Right. So that way we don't waste your time having a hard pull. If you come to me and say, well, my score is already in the high 6 or high 7s, then I'm going to send you to the loan office. I ain't going to waste my time with it. But I have sent people who have a 700 score and still got denied because of a recent late. You got to be careful about what's going on with your credit. You need to know how to read credit reports. Don't just be looking at your actual scores. You need to know how to look at the report and determine what's being reported in the student loans, your credit card debt, personal loans, if it shows any collections on there.
Right.
Most banks, if you're FHA, you can have some collections on there. And if it's less than 2,000, I think.
Yep, that's correct.
But anything over that, they're going to want you to pay it off.
Right.
So you might as well get it cleaned up. And a lot of people come to me and say, does medical bills hurt my credit? Absolutely, they do. If they didn't hurt your credit, they wouldn't add them.
Right.
Some banks will still loan you with collections on your credit, but it impacts your score. So depending on how serious you are about getting your scores up, you want to make sure that you are putting things into place to have a better scoring system. Yeah. Because those things impact. If it didn't hurt your credit, they wouldn't put it on there.
There were some people that were years ago, they were talking about medical debt not affecting your credit anymore. I haven't seen any evidence of that, because if it's something adverse on a credit report, then that we're gonna consider it. Right. If it goes to your credit report negatively, we're gonna consider it. There's nothing that ever hits that report that we can just overlook. So once the bank receives that credit report, it's gonna have to be analyzed.
Here's the crazy part, because they have been putting it out there, and I've had it, but since we have a credit repair program in my company, we have had people coming in and discussing those issues, as far as like saying that they were told that the medicals are not going to be counted against them, so they didn't want to pay for credit repair. Well, keep in mind, if they are going to remove some stuff off your credit, they're not going to remove everything. So I think they were saying anything under $200 or something like that.
Right, it's a very small amount.
But most people have more than that, Right. But the crazy part I've seen is as little as $5 report on someone's credit. Don't play around about them bills. They will report anything on your credit, and it can impact your scores. Small things impact your scores. So if you don't want those things impacting your scores, credit is very important. We'll do another live on that later, specifically talking about credit, things you need to know about, because we're covering a lot of topics here. We've been talking about home ownerships. We've been talking about investing. We've been talking about interest rates, things to be taken into consideration, and credit. Somebody said, I swear I was just thinking about this today, walking. Oh, okay, thank you. Well, I'm glad you was thinking about it. I'm glad to know that. That's very important, that you was thinking about it. So you said, what information can you share about buying land and building versus purchasing a home that is already built? Okay, so here's the thing about buying land. Most of the time, you're going to buy it with cash, unless you're going to get a personal loan for the land, and because there's a separate dwelling from you getting a house built. And then if you buy the land, before you purchase the land, you need to determine your income situation. Are you in a financial situation to have a house built?
True. Very,
because I think a lot of people misunderstand that they think they buy the land, they can automatically get a brand new house built. The cost of having a house built is going to cost you more than having one already there.
And I have a couple of clients now that have decided to prolong their purchase. They own land already. The land was left to them in an estate, and they decided they wanted to build. Well, everything started increasing, so they have decided to halt their plans temporarily in order to allow cost to build to go down, because the house that they wanted, big houses they wanted to build, the prices are expensive, so they're going to wind up where they would go find one new construction that same size, maybe $300,000-400,000 was going to cost them $500,000 or more to build this type of house. So they decided to wait. So building a house is great, but a lot of times for first-time homeowners, that may not be your best option, to get in something that you can afford. That will kind of be easier on you, because I don't know how familiar you are with new construction, but I have a partner in the business that does construction loans, and he talks about how hands-on you have to be as a owner. You're going to pick out everything from your doorknobs to your drawer pulls on that house. So it's not an easy task to
build from scratch.
Right.
It's not like going into a subdivision, they have everything already mapped out.
Exactly. And I'm not that person. I don't know how to pick things out. There's things in my house that we need to do, and I'm like, I don't know. I leave it to my wife. But
so the thing about this, the bottom line is, it goes down to income. The cost of materials have gone up.
Exactly.
The cost of building has gone up. Have you noticed most average brand new homes are no longer in the twos? You're talking about $300,000, $400,000, $350,000 and up.
Correct.
And you'd be happy to find something at $350,000 right now. There are still some communities available. They have that range, but it's very limited by location. Average homes now are in the fours for anything worth buying in a brand new situation. And you're not even getting as much houses we got back in the day.
Exactly.
I mean, my house was a three bedroom, two full and a half bath, 2,800 square foot, and I paid $150 back then. I thought I had it going on. We had living room, dining room, den, 2-car garage. I mean, it was pretty nice for a little lady with a child. My thing is, now you're not getting that.
No way.
You're not getting that much space for that price.
No, you'll get $1,500 or less.
And for $250,000. So when you're talking about buying land to have a house built, and that's the question he had asked.
Right.
Let me go back up here to that question. Let me see. Yeah. So basically, he had asked about that. You need to be considering your income. Are you going to be in a financial situation to have a house built, or are you going to end up having to get a trailer or a modular home? And keep in mind, even those could be expensive for some quality.
Right. That's true. I do want to encourage everybody, though. I don't want to get too far off, but I do want to let people know that if you are renting right now and home ownership is on your radar whatsoever, if you thought you might want to own a home in 2022 or even in 2023, you may not have accomplished that goal this year. But I urge you to speak with somebody that can give you a real analysis of where you are and can project when you be ready. If you think you might be ready now, reach out to your local lender. Myself, I'm happy to talk with you. Ms. Perry here, she'll be happy to talk with you. She's very educated, even on my side. I know that's not your scope, your normal scope of practice, but she understands some things in the lending space as well. Speak to somebody and find out where you are. It doesn't hurt to have a conversation. She's not going to take your credit report or give you a hard inquiry just from having a conversation. But it's really beneficial to know where you are so that you can some goals. You were talking about your graduate degree and your undergrad that took 4 years and some to accomplish. So if it's going to take you a while to purchase your home, it's okay, but you got to start somewhere. So reach out to one of us or your local lender or agent and find out where you are so you can make home ownership a reality for you and your family.
Right. So the bottom line is this: income, credit. Those are two things that play a role in your goals in life. You determine that, no one else. And when it comes down to credit, most people are not credit savvy. Most people are not trained.
Right.
So we're in a new generation now. So we don't want to hear no more about, well, I didn't know this, I didn't know that. If you don't know something, you better find out. And you can also reach out for help. And if you got kids that are now coming up, you want to make sure they're preparing themselves for future to understand how credit works, because everything is a scoring system. And one thing you need to understand, it is not just the 3 credit bureaus that you're thinking about. Equifax, TransUnion, and Experian. There's about 30 different systems that's reporting your data that most people don't even know about. Okay, as a credit consultant in my company, we understand that credit is just not reporting on those 3 reports. I can't even count how many times I've talked to customers that was like, well, I have an eviction. It's not showing on my credit, but every time I get ready to apply for some, it keeps coming up. Voila, it's coming up because it's being reported on other systems. Okay, and it's a judgment. So not only is it in other systems, it's a recorded judgment against you.
Like
so even if
data,
it can be removed off your credit, but guess what? It ain't gonna change nothing if it's reporting those other data systems. And when you're buying a home, I've had people had stuff that come up, but it wasn't on their credit report, and we found out about that.
Tax liens and things.
Tax liens and another systems. Because what is it? There's other systems that the mortgage lender pool besides just the 3 credit bureaus.
Right.
So don't be thinking you're gonna get over with something. And we're not the type of company to tell you not to pay something off. I give sound advice when we're looking at people's credit to determine what's going to be beneficial to that customer. Do you have enough time to dispute something? Do you want to go in and pay it off? You might even do a settlement. Yes, settlements do work. Don't be listening to people saying, oh, don't settle something. Listen here.
I just had a client.
It's going to stay on your credit. So you're going to either settle and resolve it. It's better than having it resolved than to have it sitting there unless you're going to dispute it and actually get it removed. And if you dispute it some 5 or 10 times, stop it. And don't even keep doing it.
Right.
Don't come to me asking me to dispute something you already disputed 10 times. Because that makes me look like we can't do something because you already done been fooling around with something and don't know what you were doing or had somebody else doing it.
Right.
Now you're expecting us to go behind somebody else's work. We don't even know what they've done. And it can impact what results we are getting based on what you've done. So we always advise people, you need to understand how credit works. Talk to a professional. There's tons of people out there claiming to do credit repair, but no, it's not a one size fits all. Understand that credit is involved in a lot of things that come down to your credit. All those things that are being reported is based on different scenarios. Is it a charge-off collection? Is it a closed account? Is it an actual collection? Has it been sold? How many times it's been sold? Is it reported more than once? If you're not looking at the report, you're not going to know that. So that's why you need to understand what you need to be looking at when you're looking at these things. Now, another thing I want to talk about, a lot of people who are not necessarily buying, but they're kind of trying to decide if they should sell their home. We already know the rates are not at their all-time low, and they're not necessarily going to go back there. So those who have a 3% have to decide on if they're going to sell their home and be willing to pay another higher rate, because you're not going to get a 3% now. So if you had a 3%, more than likely people who had a 3 either refinance or bought a home in the last 10 years. You don't have a 3 if you bought a home 20 years ago. 9 times out of 10, you don't. So unless you refinanced, and so that don't apply to you. But those people who bought their home in the last 5 years who got a very low rate, you're not going to have that same rate when you buy again. And also the cost of homes have gone up. So the most people who are going to be willing to move or sell are people who are looking for a different lifestyle. They got more kids. They need more space. They need to relocate. Those are reasons to sell, because those are valid points. Because if you're thinking you're finna go get your dream home and get a bigger home now, unless your income has changed, you're not necessarily going to get that.
That's true.
Okay, because I got some buyers who got approved and they only were approved for 200. It's like, oh, I'm going to wait. Well, what you going to wait for? Really? Unless your income is going to change, you're not going to get approved for a whole lot more.
It would actually make more sense to go ahead and secure the home if you can, one in that area, because likely, like you were saying, your equity in your home may actually increase faster than your income does. And then if you were thinking about transitioning from your starter home or your first time house into a new house, you could work with you again, sell that home, actually gain a profit from it. So many people gain huge profits from
now, and also if you're going to grant a large profit now because the market is tight for the availability of houses,
right?
You will get more money for your house now than you probably ever will.
Right. So then, if you're considering selling, now
that's the reason. So it's various reasons why someone would still sell, but you have to. Everything is for purpose, sound mind, and reasoning. And when you're making irrational choices, you get irrational results. I'm a results-driven person. I'm someone who focuses on is it beneficial?
Right.
I'm a beneficial person. I don't do nothing unless it's beneficial. I'm very funny with my money. I'm very funny with how I spend. I like nice things, but you best believe I'm never going to spend more than I can afford. And I'm not going to be broke fooling around trying to prove something to somebody. So if I got it, I can afford it. But at the end of the day, that's what's most important. Understanding you got to have money saved. You need to understand the market. You need to understand that everything is not black and white. There's not a one size fits all scenario.
Right.
Stop listening to other people. Find out what your situation is, what your needs are. And once you do that, you're able to leverage and decide on what's going to be beneficial for you as a whole. That's what's most important. We're going to be doing more lives. I appreciate those who are very grateful for what we've done. I'm glad that you are thankful for that, Will. I'm thankful for that you tuning in. Who else in here? Quisha, I'm glad you feel like this is good information. I'm grateful for that. So a lot of times when we get to talking, we don't get a chance to see the comments, but I'm very grateful for those who are participating in the live because that's very important. And now those who are on Instagram, we ain't forgot about y'all.
Yeah,
Unfortunately, what happened is we were not able to set up Instagram live the way we got Facebook live because it's a whole nother setup. With us having new equipment, you gotta be prepared for that. And obviously I wasn't. Right. Not for Instagram. Facebook Live, I've been doing Facebook Lives all along. Instagram, you gotta, in order for to go live, you gotta use your mobile device unless you go into another streaming software. And then I noticed I'm not able to do that unless I have keys and all. It's just a lot more involved. It will eventually happen for us.
Yes.
And then I did it one time and I wasn't able to save the live. Yeah. So I was like, you know what? Forget that. At least we know this will still be on there.
Right. Yeah.
We got the green screen on there. Y'all can see the whole background, but I ain't worried about that. We want to commit to what we said we was going to do. We said we was going live. Yeah, we did. So you're getting that. Okay. You're getting the live and we'll be able to share the video afterwards. But it was not an easy task at first because there was some issues with Instagram, and we wanted to make sure we wanted to have it all on one streaming so we can see all the comments from all of it. And we can do that, but it's other things you have to do to get to that point. Now we're open for questions. Let me see who else is on here. Let's see, go back. Yeah, Thank you, Renee.
I'm actually have like 10 minutes for questions. So
yeah, we got 10 minutes and we're gonna wrap it up. Let me see who else is on here. Okay. We're just going back to make sure we didn't miss something. All right. He asked a question about leveraging renting. We explained that. Mm-hmm. Keisha, thank you for tuning in, not turning in. Okay. So it looks like most
we got all the questions. Did we answer all?
Somebody said, Lord, thank y'all. Yes. So what we just want to summarize the most important key facts. Is there anything that you want to leave out on what we just discussed?
Well, I do want to just touch back on the importance of finding out where you are in your journey. And the only way to truly do that is to speak with a professional. Everybody has their own avenue in what they do. Real estate is your area. I won't try to tell people too much about properties. I will defer to an agent. You know this market. You know how real estate works. So people that are interested in purchasing a home, especially if you're a first-time home buyer, you've never bought a home before, you only know what you know from what you've researched and what your friends have told you. That information may not be it's not one size fits all. Their situation may not be yours. You could work at the same place, be working there for the same amount of time, and just because they bought a house for $200,000 doesn't mean you're going to qualify for that same amount. So speak to your professional, find out where you are in your journey, and then it can happen for you. So I just want to leave you guys with that. If you don't know where you are in your journey, speak to someone and find out where you are. I'm happy to talk with you. Tisha's happy to talk with you. So reach out to us if you want to find out where you are.
Absolutely. Like I said, you guys know me. I'll be doing my little Facebook lives, and this is just the beginning of where we are. I got other things going on. I also have a YouTube that I'm going to be posting more on there, and it's going to be growing. And I want those who want to support me to like my YouTube page so that when I start doing postings, I can start getting views. It's going to be a process. YouTube is not like Facebook. Okay. It's a lot more involved. And that's why I haven't really been doing much on there. But everybody keeps saying, you need to get your YouTube. You need to get your YouTube. I've been had a YouTube, but I really wasn't using it. So I'm going to get that going. And then because eventually I won't be posting much on my personal page. Okay. So you guys, if you want to keep in touch with me, you got to follow my other business platforms. New question there. There's a question. He says,
so what are your thoughts on taking the appreciated value in a home and putting it toward new property in this market?
That's what a lot of investors are doing.
A lot of people are doing that, and it makes sense, honestly, because you don't have to take money out of your pocket. You can take the increased value, so the equity, if you would,
Without moving.
right. So a line of credit, you can do things like that. I have a gentleman that's doing something similar, because right now you don't want to do a full refinance on a home, because like you said, if you secure the refinance in 2021 at 3.5%, you don't want to refinance to 5.5%.
I mean, not at all.
You want
so
to take
home
out
equity, line of
take
credit.
a line of credit out, and then you can use that cash.
Do the line of credit, because if you do the refinance, you're not going to get the rate that you had 3 years ago.
Your payment's going up. I'm just being honest.
Right.
I'm here to tell you, your payment's
and
going
then
up.
even with that line of credit, that's still part of your mortgage. That's
Exactly.
not. It has to be paid off in order for you to sell. So
Exactly.
it's just adding on to another debt. A lot of people do that to pay off debt too.
Mm-hmm.
People do that to clean up their debt, consolidate their debt.
But some people use it for investment, and I mean it.
A lot have.
Yes, and
I sold about 3 homes in the last 90 days like that. The people paid cash because they took the money. That's why people can say, well, we were getting the cash from. Where are they getting the cash from? Well, people getting cash from different sources. They get cash from their homes, where they took a line of credit out. Also, they're getting money from their 401ks, investments, all these other type of investments. That's how people get money.
It lets you know how important real estate is if people are willing to dissolve their 401k and take a second mortgage out on their house.
See what I'm saying?
Because real estate is lucrative. It appreciates. It's an appreciating asset. So if you invest in real estate, renting does not get you any closer to being able to obtain equity and things like that. So if people are going into their 401k to pull out money to purchase real estate, then it should just give people a viewpoint on how important it is and how valuable it is. So yes, Will, that's a great idea. And if you're thinking of doing that, you're on the right track for sure.
Somebody said a tree fell in front of Lalisa's car and barely missed her, but she is here now, but say she will just join the next. Okay, why did she put that? You know what? Tatiana, why you putting that in the news chat? Somebody fell. Listen, that's important to know, but I don't know why.
Right. Yeah, not sure.
I mean, that's sad that something fell in somebody's car or whatever. I'm glad she's okay. 1 second with the water, but we about to end this. It's really great that we went ahead and got it going. I know it's a little sketchy there with your head showing up for that. Yeah, it's a little blurry, but it's all good. Listen, this was fun.
It was.
And this was just the beginning of what's going to take place. And I got all this new equipment, so we're going to have to figure it out. It's going to get handled when you got new equipment and you got new software.
Right.
You got to reprogram stuff. And I should have just brought my other laptop. I didn't even realize how difficult it was going to be with this new MacBook Pro. MacBook Pro is a whole nother beast. And when you got all these other things, some things ain't even compatible because it's so new.
Right.
But anyways, you guys, so Roger, Sis Tisha, you are real good. Thank you. Thank you. Yes. We got a lot of good things coming. And I'm so glad that you guys have tuned in to us. Yes. Let's go. We about to head out, you guys. Thank you for tuning in. Goodbye.
All right, see you guys.